And while automaker shares have been largely resilient as the strike kicks off, it's a little different story for shares of the online auto advertisers, like Cars.com, our mystery chart, down nearly 5% since the strike began last Friday. CarGurus has fallen over 3%. But my next guest argues that both of them could actually benefit from a prolonged UAW strike. Here to explain is Tom White, senior research analyst at D.A. Davidson. Welcome, Tom. How do you think they benefit?
Great. Thanks for having me, Kelly. So look, as you said, we don't formally cover the auto manufacturers. We cover a series of technology companies that sell digital solutions into local dealerships. So we're really most focused and interested in trying to understand how the strike is going to impact local dealers who are the customers of companies like Cars.com and CarGurus. And, the prevailing narrative over the last week or so around the strike is that new vehicle production will presumably slow and maybe considerably if this is really a prolonged strike, and that should divert consumer demand to used vehicles. And all else equal, that increased demand for used will increase values for used. That generally makes sense. It's just sort of basic supply demand. But we decided to look at the data, and if you go back over the last 25 years, the data is not conclusive. There hasn't always been a consistent rise in used vehicle values or used vehicle prices following, the last three UAW strikes prior to this one. So generally speaking, we don't think used prices are going to go down. And if we think if used prices are stable or hot or up, that's generally a positive for these technology companies like CarGurus and Cars.com.
Again, across the firm, there's implications if the strike results not so much in higher new car prices, but in higher used car prices. We all obviously have firsthand examples of this from the pandemic. So it sounds like a little bit of back to the bad old days.
Exactly. It's a great point. If this is a prolonged strike, hard to have a crystal ball on that front. But, if it expands to more members of the UAW and goes on for a prolonged period of time, we very well could have sort of a similar setup. And, that was a period of time where local dealerships weren't necessarily selling the amount of cars that they would like, right? Supply was very constrained, but local dealership profitability was basically at or near all-time highs because prices were high and demand was still high. So far this year, consumer demand for vehicles has remained relatively resilient. And so if you do see, upward pressure on used prices, we think that bodes well for local dealerships and could be a little bit of a kind of an echo, if you will, of kind of the landscape that we saw during the pandemic for dealerships.
Certainly an offset for them of otherwise what would be another economic or financial headwind. Carvana, I know you don't cover Carvana, but do they sell used cars or not? Because that stock obviously has been it's up 880% this year. It was down yesterday. It's back up today. So I'm looking at how people are trying to figure out how they might benefit or not from what's going on here.
Yeah, so I don't formally cover Carvana. We've got another analyst here who covers the retailers per se. I cover more the technology side of automotive for us. They are a used car retailer, though.
They are, okay.
Although, it seems from my perspective, they're trading on a number of different things other than just kind of pure kind of supply-demand dynamics for used vehicles at the moment.